We have the Edelweiss management as well that's waiting by. They'll be detailing their numbers. They look quite good, in fact, and the stock was up close to around 4.5% in reaction to their numbers. So we'll cut across shortly to the Edelweiss management. I think they are almost ready to get going. So I guess we could cover. All right, I think we'll have to still wait by. They're just getting ready for that. But the markets are in fact holding up well in the green, and the Edelweiss numbers, as I was telling you as well, the stock should come off for you actually, because that one was doing quite well. And Tata Motors, another stock, has suddenly started doing well just in the last few minutes. But the management of Edelweiss, I think they have started detailing their numbers. We'll cut back to them, I think, but as we speak, the Nifty is doing quite well. We'll get back to the management when exactly they start speaking. But the big loser today, just to highlight to our viewers, have been the likes of HCL Tech as well as DLF. DLF, in fact, yesterday we saw a big bump up, but currently, in fact, it's getting sold into it. The stock is down close to around 3% as we speak. The metal names as well taking a smack, while another stock that we should focus on is a new NSE entrant. That's a new Nifty entrant. It's Z Entertainment. The stock is up close to around 5% as we speak. So watch out for that stock. It's currently flying away. Also pull up the stock HIL. Our ticker team was flashing that for us, that this time around they gave a profit of around 15-16 crores. HIL Limited is the stock I'm talking about. That's versus a loss, and that's why that stock is up close to around 6%. But let's cut across to the Edelweiss management. They're detailing their numbers.
Again, we have clocked revenues of 915 crores, which is a growth of 57% as compared to last year. And the profit after tax for this quarter is 79 crores, which is a growth of 72% over last year. So fairly good growth. Obviously, the India was in a very different macroeconomic place a year ago, so things have improved a lot in the last 1 year, and our growth is also a reflection of that. Our excluding insurance, the profit after tax for this quarter is 90 crores, which is a 45% growth over last year. And we have a total group equity base net worth of 3,261 crores. And I'm happy to say that for this quarter, we have been able to clock return on tangible equity excluding insurance of 15.1%. So, which is also almost a 300 basis point improvement over ROE a year ago. And we've been able to achieve this by not aggressively growing the balance sheet. Our balance sheet has grown only by 30%, but the profit has grown by more than 45%. So overall, we have got our old strategy of continuous growth and non-linear growth. We have also used the current good macroeconomic environment to strengthen the balance sheet, to improve liquidity. Our gearing is only 3.7x time on the balance sheet, which gives us a lot of headroom for growth. And we've been rated AA by CARE and ICRA and A1 plus by CRISIL. And overall, all the business groups are in a very good shape. The 5 business groups that we have, credit, our entire book size is now almost 9,800 crores, which was 8,800 at the end of first quarter. So we've added about 1,000 crores of credit assets in this quarter, and both wholesale credit and retail credit have grown fairly well. Our asset quality is under control. The provisioning continues to be more than 100% on this book. So overall, a fair amount of traction on the credit side, which has been a steady, stable growth business for us. Commodities business is also scaling up well. From the precious metals part of the business, we have added.
Okay, that was more from Edelweiss management. Good set of earnings on both on the top line as well as in the bottom line. They've clocked in a growth of 50 as well as 72% on a year-on-year basis. But right now, the stock which is on our radar is NIIT Limited.